All right, welcome Mortgage Calculator. We will wait just a few minutes here to get started. Let us go live on all the different platforms. Give everybody a chance to jump on. In the meantime, we did put up the chat there on the screen, so feel free to drop a comment in the chat there as you tune in. Good morning to everyone. Good morning, Mark, Adam, everybody tuning in. Feel free to drop a comment while we wait to get started here. Jason, Sonara, comment in there in the chat. Appreciate everybody tuning in nice and early. We'll start here in just a minute. All right, for those of you just jumping on, we're just waiting a second here to go live on all the different platforms, and we will get into it. All right, it looks like we are good to go, so we will go ahead and get it started. We'll take the chat off the screen, and we will get into it. So, welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non QM loans. And what we like to do on this show every morning is go through the live mortgage interest rates for different programs. And then we do a deep dive into a different topic every day. Today's deep dive is going to be on prime jumbo loans. So we will have our sales manager, Jose Gonzalez, with 27 years of experience, do a deep dive into that here in a little bit. But before we get into that, just like we do every morning, we'll go ahead and pull up the pricing tool and see what the mortgage interest rates are for today. So, Nick, you ready to pull that up and we can see what the markets look like this morning?
All right, let me go ahead and switch my screen and we will check it out. So, as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. If you would like a full loan estimate, we have over 300 licensed loan officers in 24 states today for primary and second homes. And then if you're looking for an investment property, we can do our DSCR business purpose loans in 44 states. So please get with our team if you'd like a detailed breakdown. We're going to pull up the general terms here for today. It is May 23rd, just after 11 a.m. So our general programs have new rates issued for today. And this tool will show us the rates and the APRs, which include all of the fees, obviously. But if you'd like a full breakdown of the fees, just get with our team members. They'd be happy to provide that. So for our demos today, we'll set up a basic scenario and compare the APRs across the different programs so we can compare what the rates are doing today. So our loan amount will set to $400,000 for all our demos. We'll set the LTV to 80% loan to value, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. Most customers are asking to buy down the rate a little bit, so this is the most common request. We're going to compare our conforming conventional programs to our FHA programs, and then we'll check out our expanded guidelines, aka non-QM, where we have over 5,000 additional programs that use alternative income. We can also do VA loans, but that is only for our eligible vets and active members. So if you are an eligible vet, we'd be happy to quote that, but not everybody is, so we don't do that live. And same with USDA, that's only for properties in a USDA eligible area. If you do happen to be shopping in one of those areas, please let us know. We'd be happy to quote it, but not everybody is, so we don't do that on the show here. We'll start with conforming conventional for our first demo. We will set up a purchase, 30-year fixed loan, pretty standard, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos today, we'll use a 760 estimated FICO score and an estimated debt to income ratio of 40%. So with these basic settings, let's check out the conventional rates this morning. They're about the same as yesterday, so we still have one holding on just under the 7 APR here. So 6.75 rate for 1 discount point in cost and a final APR of just under 7% at 6.917. So the rates have gone up this week. Hopefully we see some downward movement with some announcements, with the economic announcements coming later this week. But for right now, this is what we're looking at. And now remember, we're going to compare APR, which allows us to compare across programs. So right now we have our conforming at 6.917. So let's do the same scenario. And if our customer doesn't qualify for conventional, usually the first option, we'll set up the same scenario and select FHA so we can compare that. Everything else will stay exactly the same. We'll just select FHA. Most customers that can't qualify for conventional for some reason, FHA has a little bit more leniency on credit and more leniency on debt to income. But we'll simply compare the exact scenario across these two programs. So the best option today for FHA, 6.125 rate, 0.875 discount points and costs, and a final APR of 6.713. So in this case, when we compare APRs, even with the yearly mortgage insurance and upfront mortgage insurance for FHA loans that are required, it's actually, in this scenario, a little bit cheaper for FHA. So definitely recommend our customers out there shopping that qualify for both, compare both. And for those that may need FHA, it's actually a great option here where it's actually, in this scenario, a little bit cheaper for our borrower when we compare apples to apples using the APR. Now, where we love to specialize is if our customer for any reason doesn't qualify for conforming or FHA. Many other lenders or banks don't have any other options, but that's where we love to come in with our expanded guidelines, aka non-QM, where we have over 5,000 additional options we can use. So if we set up the same scenario here, 80 loan to value, everything else stays the same, primary home. Now we have a new option that pops up with non-QM where we can select different income. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what most people are used to. So typically we would select a non-QM program that allows us to use something different. So we have asset related programs, we have business bank statement programs, we have investor programs we'll talk about in a minute for investor properties. We have personal bank statements, we have VOEs, 1099, P&L, all kinds of different options. The one we always do for our demo, our most popular option, is our personal bank statement 12-month program. And that's for our self-employed borrowers. Many times our self-employed borrowers have various write-offs on their tax returns and have a hard time qualifying at all, or in some cases just need a little bit of extra income. And that's where these programs come in. So instead of using their 2 years of tax returns, we're actually going to use their last 12 months of bank statements and determine a debt to income ratio using only those bank statements, and actually looking at their cash in the bank rather than their tax returns. So most self-employed borrowers qualify for much more income and therefore can get the home they want or can qualify where they wouldn't otherwise qualify at all. So these are great solutions. The rates are a touch higher, but we love to compare these. So let's check out our bank statement options this morning. So you saw conventional was at 6.9, and here we have an amazing bank statement option at a 7.25 rate for 1 discount point in cost. And the final APR is 7.317. So just a little bit higher than conventional here to use a completely alternative income documentation method. These are great options for our borrowers that need a little bit of help, a little bit of extra income, or have any other kind of issues. Some of these programs may allow things, probably not the low rate options, but if you cruise down here, we have all kinds of other options at a little bit higher rates. These may allow things like credit events, such as foreclosure, bankruptcy, and other different items that would not qualify someone for a regular program. These programs do allow in some cases. So please get with our team. They would love to navigate the hundreds of different options here and find the one that fits best for you. Now, before we go into Jose's demo on jumbo loans, which we don't do live here, that's obviously a different category. We always want to do our live rates for investment properties. So we love to work with investors, whether you're a first-time investor or you have dozens of properties, we have some great options. So if we switch this to investment occupancy, set up the same exact scenario, 80% loan to value, 20% down payment. We will compare our investment property options. We'll compare conforming conventional investment property rates to our expanded guidelines, non-QM programs. Because there are no options for FHA, VA, and USDA, we simply compare these two options here. So let's start with conforming conventional. Everything else will stay the exact same as our other scenarios. The only thing we've changed here is occupancy from primary to investment property. So let's see what that change does to the rates this morning. So for investment properties, the conventional programs that offer these programs have added loan level price adjustments, which is the reason we don't see a low cost option here. So even though we asked the computer to find one discount point option, there really isn't here. So the best option the computer found is a 7.125 rate for 3.625 discount points in cost and a final APR of 7.379. So these are great options for our borrowers that do qualify for conventional full doc loans. But many of our investors would like to save discount points. So they would like an option at a little bit higher rate because most rental properties cash flow still for less discount points. But unfortunately, with the conventional programs, we don't have really any options for that. So what we always suggest is our customers looking at investment properties compare the conventional, which we're looking at here, to our non-QM options. So for our final demo today, set up investment property, and we'll select expanded guidelines, aka non-QM, where we have all of our additional options. Now for our income verification option for investment property, most popular program and our best program here at the Mortgage Calculator by far is the DSCR program. And that is because it doesn't actually require any income or employment from the borrower. We're simply going to use the estimated rental income from the property to determine a DSCR, aka debt service coverage ratio value, which is if the debt service or if the estimated rental income can cover the debt service, aka the PITIA of the mortgage payment, that is a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. If the property doesn't cash flow on a monthly basis, aka the rents don't quite cover the monthly PITIA of this mortgage, that's a ratio under 1.00, and we still have a ton of options for DSCR ratios under 1. So for our demo today, I'll just leave this blank so we can see all the different options. And the final thing we must select is a prepayment penalty. We always select 3 years. That is standard for an investment property under non-QM programs. However, we can select 0. That will limit our loan programs and cost more money. And we can also select 5 years, but not every loan program allows 5 years. So we typically select 3 to see the most options. So with these basic settings, let's check out our DSCR rates this morning. So here the best option that came up, 7.75 rate for 0.725 discount points and cost. Here our investors happy. The rate's a little bit higher, but we saved cash out of their pocket so they can invest in more properties. And the final APR of 7.807. So remember, we compare APRs for apple-to-apple comparisons. The conventional programs were at 7.3 something. And here we have a DSCR program, very comparable, just a little bit higher, but a lot of benefits for our borrowers, our investors out here that are looking to capitalize. These programs don't require income employment. You can start 1, 2, 5, 10 of these DSCR loans at a time to refinance multiple properties, buy multiple new properties. Very flexible program, very different than a full doc conventional loan. Pretty much every borrower that we've done in the last few months have been choosing to go with a DSCR loan rather than a conventional investment loan. So definitely recommend for those out there looking for investment properties, check out these amazing DSCR options. And if you cruise down here, you see there's hundreds of different options. Some of these may allow things like short-term rental income, or as we mentioned before, some of these non-QM programs allow bankruptcies, foreclosures, and other credit events that would otherwise not qualify for a conventional program. So please get with our team and they'll find which one fits best for you. So now that we've gone through the live rates, let me go ahead and switch my screen and we'll get into our detailed topic for today, which for those of you that joined us earlier, we're going to be talking about prime jumbo loans. So we were just looking at conventional programs that were $400,000 loan amount, which is under all of the maximum limits for conforming. So what we're going to be talking about here is a jumbo loan, which by definition is a loan that's greater than the maximum amount of conforming. So typically, I believe this year the maximum amount is 726 or something around there as the base. But remember, every county in America has a different level. So some of those borrowers out there in a lot of the high cost areas like California, they have a much higher limit. So we can't just generalize it. Basically, jumbo means anything over the limit for your area, which typically most areas in the U.S. are that 720 something number. So now Jose actually has some live rates that he's pulled up on these prime jumbo programs, so we can actually look into the differences here on what we can offer. So, Jose, if you're ready, go ahead and take it over.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Prime Jumbo is a great product because it allows us to streamline the underwriting process. Now, how do they do that? Well, the name Prime in Prime Jumbo comes from the fact that these loans use automated underwriting, specifically DU, to qualify the borrower. And in doing so, streamlines the underwriting process, right? Whatever automated underwriting states as your findings, those are your loan conditions. So, especially nice when you're looking at a self employed borrower. You only want to be able to use that 1 year tax return. Well, if you put it through AUS and it gives you the 1 year tax returns and the findings, that's all you got to use 1 years of tax returns. So, exactly the same as conventional loans, except as Nick mentioned, the loan amount is above the conforming loan limits for the area, which in the area that we're doing our example of Miami-Dade County, it is $726,200. Anything above that would be a jumbo loan. Now, keep in mind that there are different pricing plateaus on these loans. So it could be $1 million, or it could be 1.5 million, at which they may have LTV adjustments and so forth. So keep that in mind. If you are in those more expensive areas like Los Angeles, for example, where your conforming loan limit is probably going to be close to $1 million or above, then you may already be in the next pricing plateau when you are pricing out your loan. So keep that in mind. So I have multiple examples here for you today. Our first example is for a primary, right? For a primary purchase with 15% down. Now, keep in mind, technically, this program does go up to 89.99 LTV. However, I was not able to get any compliant pricing above an 85% LTV due to the current state of the secondary. So, depending on where you are, you may be able, and depending on the transaction type, you may be able to get pricing up to 89.99. But keep in mind that the maximum LTV for the program is 89.99 and not 90%. So if you put 90.0, you're absolutely not going to get any options. Keep it at 89.99 and below, and you will get prime jumbo options. When you are above 80.0% LTV, keep in mind that mortgage insurance is already priced into the rate. Right? So in our first example here, with our borrower with 800 credit, we have some good examples here. We have 8% rate gives us a lender credit. And let me show you our loan amount here is 977,500. So 1222 is our lender credit at our lowest cost option, and 7.125, amazing rate. You can buy it down to 7.125 at a rate of about 2.25, I believe that was. So very good. 15% down option for a prime jumbo purchase. So now I have a 20% down option prime jumbo purchase, and look at these rates. They are smoking. If you looked at the rates that Nick just gave today for our conforming full doc purchase, remember this is a full doc purchase as well. It's sort of conforming because it does use AUS. Look at those rates, 7.125 at about a half a point fee, and you can buy it all the way down to 6.25 at a cost a little bit over 2.25 points. So those are definitely look to me like conforming loan rates, very similar to it. So amazing example here. So I can show you what 5% more in down payment gets you. It gets you the rate, your starting lowest cost rate from 8% all the way down to 7.125. That's almost a 1% swing. for that extra 5% down, and quite a considerable difference in the payment. Because even though we do have a lower loan amount, but we have 61.98 here as our payment at the lowest cost option versus 71.73 here for our payment at the lowest cost option. So
and the reason we see that big swing there is because the MI is included in the other one, right? So there's no separate MI, but that's why the rates in the monthly payment is much higher, because they have to include some sort of MI bump, right?
Yeah, from what I can recall, I think it's usually somewhere around a half a point in fee for that MI factor being built into the rate. And now we got a cash out primary option. Now keep in mind, Prime Jumbo is always full doc. I put full doc there on the title just to keep reminding everyone, right, to reinforce it, but it is always full doc like any other automated underwriting. So now we do see, now it does get a little pricier on the cash out, but again, this is at the maximum LTV of 80%. You have 7.5% as the lowest cost option, and you can buy it down to 7.25. Not much of a difference there in the cost, and you're looking at about a little bit over 2 points on the first one, and just under 2.5, 2.375 on the lowest rate option. So now some investment options. Now 80% is the maximum LTV on the Prime Jumbo. But look at the rates. Now, remember, this is investment, and something else you guys refer. This is 80% LTV investment purchase, right? Look at those rates. Those are pretty good rates. 8%. That's about a half, maybe what, a quarter point fee there, exactly at 8%, and you can buy it down all the way to 7%, a little bit above 2 points. So very good investment property fees right here, very good rates. And surprisingly, look at the cash out investment is also 80%. Now, this is something that should really excite everybody. If you're working with investors, you're going to know Fannie is 75% on the cash out, and here we're at 80%. So this is a very good option. Obviously full doc, but very good option. And look at that, 8% is your lowest cost option, and you can buy it down all the way to 7.25 at 80%. So those of you that have been pricing out conforming loans, cash outs, are going to know that you have a real big issue trying to get compliant rates at the maximum LTV. So right here, notice that with our Prime Jumbo, amazing pricing for our investment now. And do remember, all of these do require automated underwriting of approved eligible. So great options for purchases and refis for primary, second home, and investors.
All right, great. Well, I don't see any questions in the comments, so I think we can go ahead and wrap it up. Definitely a great program that a lot of people don't necessarily know about. So if you would like to take advantage of one of these programs, you can get with one of our 300 loan officers. We are licensed in 24 states to be able to do these types of loans. You can connect with us at themortgagecalculator.com. Now, we do this show every weekday at 11 a.m. Eastern, so we can see how the rates change on a daily basis and do a deep dive into a different topic every day. So thank you, Jose. Thank you, Nick. Thank you, everyone, for tuning in, and we hope to see you tomorrow at 11 a.m. Eastern Time for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Have a great day.
Thanks, everybody.
Thank you, everybody.